So let's look at oil, US oil, VFS hub, and its correlation with US dollars. Donald Trump becoming president of the United States, and currently the structure of oil. We decided to look at oil structure from higher time frame, which is weekly, for a clear directional bias, as every mistake could be catastrophic. So we draw a price action from 2020, where we have a strong bearish drop, a continuous weekly drop in the price of oil from $62 per barrel, from 64.30 per barrel. Oil price dropped significantly. Can we derive a story from that price action? Yes, we can derive a story from that price action to possibly see where structure might take oil to. It is important to look at the structure and see where it might be heading to. So we also look at this structure, October 2018, how price of oil dropped from 75.38 per barrel to 45.85 per barrel of oil. So we'll be noting all this behavior, we'll be noting all this character. Look at what happened in the month of October and November. By December 2018, the price of US oil have dipped into 40.73 per barrel. And there is also a possibility that US oil, might retest that level again. There is a possibility. After oil holding at 60 something level for a very long time, oil have managed to hold $66 per barrel of oil since November 2021. It's almost like a benchmark for the price of US oil. But I see that coming to an end. But we will follow structure. We cannot dive into such conclusion. So we look at oil. Oil strategy is a little bit different. Oil strategy is a little bit different. And we like to approach it without cutting bodies of candle. So let's look at the structure from the bottom. After this fall of price from $64 per barrel, you can see the structure, support structure, break of support structure, retest one, retest two, and price have changed structure. But we will find out everything the way it happened, and we have here a resistance structure, another resistance structure, two, another resistance structure, three, another resistance structure, four, five, six, and break of structure. So oil is confirmed for sale. The importance of looking at price from a weekly perspective is for clearer directional bias. We had a post earlier this month where we on technical got the chart of oil wrong, but today we want to correct that mistake. That oil could be facing more bearish days based on the structure of price. When you look at the structure, I will explain it why you could be seeing oil dipping. Oil follow structure. We have seen what happened in the month of September 2018, where price dipped from $75.81 to $44.79. We'll be looking at the greenback. Will the XY safe haven status return? If the greenback safe haven status returns and the buyers resume, then we could be seeing gold into future trouble. And the only person I think that might stand strong and outstanding might be BTC and Ethereum based on the structure. So based on the structure of oil, oil is setting itself up for a bearish move after a breakout from an ascending trend line. I know this ascending trend line is different from what they told you about ascending trend line. You can see the trend line ATL. So we apply market structure interpretation to anything. The strategy is the same. It doesn't matter natural gas, it doesn't matter UK oil, it doesn't matter whatever it is. The analysis is the same. So this is our ascending trend line. I would like to change the color to make it outstanding. So you see, oil has broken out from this structure in the month of July, broke out from an ascending trend line after retest, price retested again and retest again in the month of October, and the price is going down. Oil might be going down based on the structure. It has already broken a weekly ascending trend line. Resistance structure, break of resistance structure, price formed a double bottom. A double bottom, a bullish price action. Break of the neckline, retest, and price left, where oil saw a new all-time high of 129.07 per barrel of oil. And since then, oil rejected this price. The Saudi-led gang would not return price to this level. So many fundamentals surrounding it. Iran and Israel geopolitical tension didn't really bring much liquidity and didn't change sentiment. But structure is changing sentiment. We have here resistance structure, break of resistance structure, price returns on demand, making here more demand flow. So if here is more demand flow, then I need to see how many touches for me to call it a psychological ascending trend line. Demand flow one, demand flow two, demand flow three, and demand flow four. Or I can also call it demand flow and SR. That's demand flow and also support become resistance on break of structure. Now, when the support structure was broken, it becomes a resistance structure, a retest candle, and a resistance structure. A retest candle and a resistance structure. Now turning here from demand to supply roof. So oil have less appeal based on the structure. That is what the structure is saying. The structure says that oil has switched from demand to supply. So there are many sellers but few buyers. That is what it means. That is what the structure is saying. And when we look at it again from another perspective, we draw our analysis from the roof. We will see a drop in price, a sharp drop in price, a sharp drop in price. As the triangle continues to contract, price has broken from the floor of the triangle and retested, and we will continue to see more bearish days for US oil. And I believe where US oil goes, UK oil go. The structure never lies. Structure never lies. But if fundamental analysis swings oil trajectory, we will also see it on the chart that there's change in direction. But for now, a contracting triangle, look at the roof, look at the floor. For every time price touches the roof, it ends in a sell. Every time price touches the roof, it ends in a sell. And we came closer to the roof again within the zone and sold off again. Now technical price have broken out from the floor, which I call demand floor. A breakout from a demand floor becomes a supply roof based on our strategy. So what I want to see is now we have a supply roof. This is our supply roof. Supply roof has been very kind to sellers. This is supply roof and a very strong rejection zone where sellers are not willing to buy oil at this price. They quickly rejected it, and we have series of touches on our way down, making here an RS level resistance becomes support on break of structure. So this is what we have, and price are broken out and retested. And I see oil coming down to 42.66, and we look at other confluence to support that bias that we are not wrong on oil falling. After a break of structure, the next place oil could find a strong demand based on our strategy would be at this green line. At the green line, we have a clean break of structure and also a clean weekly retest, bearing witness that oil broke out from the structure. What structure was broken? A resistance structure. A breakout of a resistance structure returns price to demand. After price broke out from the structure, you can see this is a resistance structure. Price broke to create a new high where oil traded at 129.07 per barrel of oil. And you can see the retest in the month of June 2022, Monday, precisely. It's a weekly candle. Price return again, beautiful retest. We can see another beautiful retest. And we had three retests on this floor. A broken supply roof becomes a demand floor. So on technical, this becomes our demand floor for oil, where oil buyers are waiting, where all the buyers are waiting. They are willing to buy a touch on the descending trend line, DTL. So for every time price touches the descending trend line, oil buyers are willing to buy because they assume it's a break of a previous low. So it makes a decent sense to buy and sell. If you buy here, it's okay. You buy here, it's a break of a previous low. You buy here, break of a previous low. So the new low will bring oil to 43 into $42 per barrel of oil based on the weekly structure. And when we look at what oil has done, this becomes a new benchmark after the break of the current 66.83. So on a horizontal structure, we want to see an invalidation of strategy. That is invalidation of trend, invalidation of support structure, a psychological support structure that have helped oil buyers a negotiating ground where buyers and sellers have always found a common compromise in price. That is $65.54 per barrel of oil. If this level is broken, then we confirm that the negotiation is over and nobody's interested in oil anymore. So what will happen next? In order to create demand, you have to drop your price. That is what it means. So when a rich man wants to buy, he wants to buy low. So the technical information here is saying that if sellers do not drop their price, buyers will not buy. Keep your oil, I keep my money. Those who have oil do not have money. They need money in exchange for oil. Those who have oil do not have money. Those who have money do not have oil. So it is trade by barter. So they want to buy low. So it makes sense to see oil on a weekly break this structure. So we have first of all broken an ascending trend line, a blue ascending trend line, ATL. The final sell confirmation will be a breakout from 65.54 level. If we break out from there, then my sell bias is complete to bring oil to $40, possibly $43. That's how you begin to see oil. It is 100% likely to happen. 100% likely to happen. Except buyers push price again on this floor and return back to $80 per barrel. But they will continue to trade in this fashion. They will continue to trade in this fashion until buyers are able to break a supply roof, use it to demand floor, then set up a new demand phase to challenge the new all-time high. So two things are likely to happen for oil. Two things are likely to happen based on structure. If they are able to break the resistance structure, which is a supply roof, a previous demand floor broken becomes a supply roof. If the supply roof is broken, price returns on demand floor as a foundation for uptick, showing that we have few suppliers, more demand. So this is what is likely to shoot the price of oil up. When there is limited supply and there is high demand, the oil price will rise. But at the moment, we seem to have more sellers than buyers. So if that happens, then we'll begin to see more bearish candles likely to break a $65.54 per barrel negotiating benchmark oil price since since October 2018. This has been a benchmark price after break of structure. Since 2018, we have here support structure, break of a support structure, retest to a broken structure, price switch from demand to supply. So this becomes a new supply roof. This becomes a new supply roof for oil. And oil tested the supply roof, this 65.54 benchmark. Oil tested it three times before OPEC change in price as a result of demand and supply. After break of structure, price returns on retest 1, retest 2, went on to create a new all-time high for oil, where it traded for 129.07 per barrel of oil. And when price returned, this has become a new benchmark, 65.54, a psychological horizontal demand structure. So at this level, every time price returns here, it's a buy, returns here, it's a buy. So we'll have to watch this level. If this level is broken, then we'll see oil come down to 43 into $40 per barrel of oil. So it is based on structure, it's based on fundamental. So we'll continue to see OPEC decision. We continue to see how the quota system is being appropriated. We continue to see how geopolitical tension plays out and the strength of DXY. If DXY and the index continue strong, then we could be seeing oil make some retrace. And already we have already broken out from an ascending structure, a blue ascending trend line, resistance structure, break of a resistance structure, retest, demand floor 1, demand floor 2, demand floor 3, demand floor 4, break of a structure, price returns on supply, switching from demand floor to supply roof. On technical, we are setting up for sell, but we need sell confirmation. Final sell confirmation will be a breakout from this structure. So if the benchmark $65.54 benchmark is broken, which is a benchmark since 2018, a previous support structure becomes a supply roof. So this structure has been playing for since 2018. So if we can break this structure, then we are certified that oil will come to $43.30 into $40 per barrel. So this is what we see for oil based on the structure.